So where do we go from here? Joining us now to talk about that and more, Tim Urbanowicz. He is head of research at Innovator from Goldman Sachs Asset Management. Tim, good to have you back on. So
Great to see you, Brian.
When I hear best whatever, insert, example here, since 1991, I guess you could think about it like, wow, there's a lot of momentum, or wow, the run is over, because that's a hell of a stat. Where does Tim Urbanowicz fall in?
Well, Brian, it's been a great run for small caps. You look year to date over the last year, you're seeing stellar outperformance versus large cap. And this has not been concentrated to a single sector. This has really been broad. It's been across the board. As we head into the back half of the year, we do think the pace of the outperformance is going to moderate. If you look at where the gains have come from year to date, 40% of the gains have been driven by AI infrastructure stocks. It's one of the reasons we've been bullish on small caps, and it's helped in a major way. But if we look after the last rebalance of the Russell 2000, the AI infrastructure exposure has really been cut in half. We've gone from 15% down to 7%. So you still have the exposure. It's still a positive, but much less of a tailwind moving forward, capitalizing on all that money that's rolling downstream from the big hyperscaler spending. Secondarily, you look at the valuation. The valuation is much less attractive than it was to start the year. So a lot of the easy money, the bigger gains are going to be hard to come by. In our view, this has to be a cyclical growth story, and this has to be an interest rate story moving forward.
Yeah, because to your point, I mean, these stocks were unloved and forgotten about, and now kind of people have remembered them, and a lot of money has flown in. We just talked with our lead guest, Elizabeth Burton, about interest rates and inflation. Is this going to be an interest rate story? And if so, which way will it swing to the benefit or detriment of small cap?
Well, typically, Brian, if you look at small cap performance, it's all about economic growth first, which we think is going to be there. But interest rates are also a big component, given how much floating rate debt we see a lot of these companies having. I think one positive for small caps here, we think the market is mispricing the Fed right now. You see a hike priced in by the end of this year, and we just don't think that's going to happen, Brian. You look at payrolls data, been a little bit softer here recently. We're starting to get some relief with the situation in Iran. Yes, you've had a lot of tough Fed speak here recently, but we think that has peaked, and ultimately you're going to see a Fed on hold. You're going to continue to see those hikes be pushed out, and as those get repriced, we think that does offer some more support, not just to small caps, but also to this broadening out trade that we have seen across the U.S. equity market over the last year.